Hi, I'm Jamie, Small Business CFO at Blue. I help business owners understand their numbers and stay out of financial trouble. Today, I'm going to share one of the most common bookkeeping mistakes that quietly kill your cash flow and cost you extra. These mistakes aren't big, dramatic frauds. They're small errors, but they can snowball into overstated expenses, wrong GST claimed, and reports that don't reflect reality. And let's go through them. Mistake number 1 is the double entry trap. So here's a classic. You pay a bill, reconcile it in Xero, then weeks later, you upload the paperwork again. Now, Xero thinks there's 2 expenses. The new one that you've just uploaded will now sit as unreconciled in Xero because you already reconciled the expense the first time you put it through. So that could make your profit seem lower than it actually is. The fix: attach your receipts to the original bill and do this upfront exactly when you actually incurred the expense. That way you have a timely receipt entered into the system. Another mistake is treating a long-term purchase as an expense. A laptop, machinery, or vehicle isn't an expense, it's an asset. Assets actually get depreciated over time, and if you misclassify this on your report, it could mean that your tax deductions don't line up. So as a rule, your small things like keyboard is an office expense, whereas the larger things like a laptop is an asset. And that can be claimed over the life of the asset. So the next one is GST. Claiming the GST when there actually isn't. For example, an overseas subscription or something that you haven't paid GST on, but you've coded it with GST in Xero. The ATO can be really strict here, and it's quite easy to supply match overseas subscriptions, especially the common ones that definitely don't have GST. So make sure you are double checking these subscriptions from overseas companies and claiming the GST correctly. If you're repaying a loan, that is not an expense. Only the interest on the loan is the expense. So if you're putting the whole thing to the expense, then your profit is going to be inaccurate. And when the tax is done, it's going to be added back in. So when you have a loan, this is like more funding the business, and this sits over as a liability and not an expense. So make sure you get some help from your accountant if you're coding loans into your system to work out which portion is deductible and which isn't. Accurate books equal better business decisions. If you want to be learning step by step how to avoid these errors, my bookkeeping course for small businesses covers exactly how to do this, how you can record, reconcile, and review your numbers properly and be confident that it's correct.